Today I want to talk about stock market crash and exact dates. Is the market going to crash? I don't really know, but we can look at the history and see what Trade Seasonal can tell us about stock market crashes in the past and see if we can learn and find out exactly what time frames the probabilities are the highest. So what we do, we go to indices common and just type GSPC. That is changing to SPX very soon. It's already SPX on our development servers. Then we're going to select actually 94 years. So we're looking at the last 94 years. This by default, the opportunity period is selected is from today on for 30 days from now, but that's just the default opportunity, so you can pretty much ignore that. Let's see. We are here, so the left side of this opportunity window is always today, or at least this date right there. So this is S&P 500 last 94 years. The trends are combined. Take a look at this. At the end of September, markets rise, they go sideways, and then do you see this drop right there? Let's take a look at this drop historically. So I'm just going to select the opportunity window to take this. Actually, I'm going to change this to 20 and reduce this to 7 days. So we're looking at a 7-day window, and the reason I selected this is because it has this sharp down. So let's take a look at what we actually see. Look at 1929. During this 7-day period, there was an 18% drop. 1987, during this 7-day period, it was just around 4%. In 2008, there was almost 14% drop within this 7-day period. What is this 7-day period? It is October 20th until October 26th. So this seems to be one of the most vulnerable times for a stock market to drop sharply. And take a look. Trade Seasonal already calls this week a seasonally bearish week. It has dropped 61% of the time during this week. That means 39% of the time this week was actually bullish. So this is the most extreme bearish week for S&P 500. The average profit was 2.18%. That means in average, it dropped 2.18% during this period of time. We can also take a look over here. So because this is a bearish trade, we're saying trade direction is short. Average was 2.18% drop, but when it went up, it only went up an average of 1.37%. This is an extremely bearish time for S&P 500. So I watched this period of October 20th to October 26th as being vulnerable. Now, is the market going to crash during this time? Not necessarily, but it sure could drop sharply because that's what it's done 61% of the time, or 57 out of last 90 years, it's been a bearish week. Now we can look at individuals. Let's look at 1929, the most famous stock market crash. We just click it and see this was a very sharp time, although markets went much further than this. That was actually almost a 40% drop, and it went all the way into middle of November. Let's look at 87. 1987, this crash started right here, much earlier, mid-October, 1013. Right there, it just went up and it dropped again. However, it dropped after the 21st for the second time, and then it went sideways. How about 2008? In 2008, this was a very bearish time, although drops started earlier, like what we have today. And, well, this hasn't happened, but last year it was a bullish year for this period. Barely bullish, but it continued going up. Last year, the bottom occurred at the early October, and then it just kept going up. So it was obvious that early on that this was not a very vulnerable time last year. The year before that, in 2020, again, this was a bearish week and it continued going down. Let's look at 1997. That was also, I remember, that was a pretty bad time. But look at this. That was like a mini crash. Also dropped very sharply during this period. It dropped 8.23% during this week. So I say, starting toward the mid to end of this week until October 26th is the most vulnerable time in the markets. October 26th, things change. Let's see what I'm talking about. See this right there? Do you see this bottoming right there? And the market's going up. There's a major turning point in S&P 500 right here on October 26, 27 time frame, and it becomes bullish. It's the most bullish period in S&P 500's history of last 94 years. Let me show you what I'm talking about. I go to the 26th. Or is it 25? Oh, I clicked on the wrong number of years. Let's look at the last 90 years. That is what I'm talking about. Take a look at this. Starting October 25 in the last 90 years, holding, this is the date range right up here, October 25 to January 6th. The markets have gone up 81% of the time. We can see what that exact number is. That's 73 of the last 90 years has been a winner for S&P 500. Look at this. It's all green. This is the most bullish time period date range I've seen for S&P 500. And that time starts on October 25, 26 time frame. Is the market going to go up for sure? Of course not. Nothing is for sure here. But look, 2018 it lost 5.76%. 2015 it lost 3.9%, and so on. But look at this. The average profit was 5.81%, and the average loss for the few years that it lost was 3.87%. It is a good statistical bet that markets become bullish this time of the year. And if they are not, they're not going to drop as sharply as the average drop is not as sharp as the gain. The worst year we see here was 1973, 11.25% drop. So that's what I wanted to share with you guys, that the most vulnerable week is about to start, and keep that in mind. It's actually vulnerable 2 weeks. It starts this week and it goes to the 26th. So if there's a stock market crash, there's a high probability it's going to happen in the next 2 weeks. That's what I wanted to share today. I can still go on review everything else, but I don't think you want to do any kind of a bullish trades in next couple of weeks. Maybe a bearish trade. This is one trade. Oh, not this. One of the trades that I'm in right now myself is the IBM short. I'm trying to write this down, and I just bought some puts, naked puts, which is not something I usually do. I usually do ratio back spread or some kind of a spread, but this time I just bought naked puts to see what I can make out of this, because it's a very short period of. So if you want to buy a put like this and you want to be in it for a matter of just a week or two, buy it 3 months in advance so the time value does not drop too much. So I bought it for January, and slightly out of the money, and I'm already a winner, but I'm going to keep it for a few days based on this and then sell it very quickly. It's an in-out thing. That's it for today.